What happens when a 43,000 crore rupee empire becomes the battleground for a family feud? India is watching closely as one of its most dramatic corporate power struggles unfolds in the real-life boardrooms and courtrooms of Godfrey Phillips India. At the heart of the storm is a legacy left behind by the late industrialist K.K. Modi. On one side is Bina Modi, his 80-year-old widow, and the chairperson and managing director of Godfrey Phillips. And on the other hand, her sons, Samir and Lalit Modi, each with sharply different visions for the company's future. What began as a disagreement over succession has snowballed into a high-stakes legal war for control over India's second largest tobacco company. Bina Modi has drawn a clear line in the sand. K.K. Modi's legacy is not for sale. It has to be kept alive. But Samir and Lalit Modi aren't backing down. Samir, once seen as K.K. Modi's heir apparent, has been ousted from the company's board and is now challenging the management moves. Lalit, meanwhile, has pushed for a complete sale of the company's assets. And at the center of the battle lies the K.K. Modi Family Trust, which controls about 48% of the shares in Godfrey Phillips. What makes this story even more interesting is the company's stock performance. Despite all the drama, Godfrey Phillips has delivered a market-beating return with its stock compounding at a 91% CAGR over the past 3 years. But is this rally sustainable? Can the company continue to grow, or will internal strife, governance concerns, and a heavily regulated business environment catch up? Welcome to Bottom Line by Groww. In today's episode, we explore Godfrey Phillips' India story. From its powerful tobacco engine and diversification struggles to its family feud and financial performance. Let's start with the business model. Godfrey Phillips India Limited is the flagship company of the K.K. Modi Group, holding roughly 14% of India's cigarette market, trailing only after ITC. The company operates in two major segments, but it's no secret where the real money comes from: tobacco. The tobacco segment contributes 99% of revenue, with brands like Foursquare, Red and White, Stellar, and Originals coming from the backbone of its domestic portfolio. But the real game changer has been Marlboro. Under an exclusive licensing agreement with Philip Morris International, Godfrey Phillips manufactures and sells Marlboro cigarettes in India. Marlboro is the fastest growing cigarette brand in the country. Volumes are projected to triple from 5 billion sticks in FY24 to 15 billion by FY28. In FY25, tobacco gross sales came in at 14,480 crore rupees, with net sales of 6,735 crore rupees. Of this, domestic tobacco contributed 68%, with the remaining 31% from exports, mostly unmanufactured tobacco and processed products. Notably, domestic cigarette volumes more than doubled from FY21 to FY25, indicating strong brand traction and pricing power. From FY20 to 24, domestic tobacco revenues grew from 2,279 crores to 3,077 crores, while export revenue nearly tripled from 976 crores to 2,549 crore rupees, driven by a surge in leaf tobacco exports. The confectionery segment, though small, is gaining ground with the Funda Candy brand and a distribution partnership with Ferrero India. In FY25, this vertical posted a 79 crore rupee gross sales, split between Funda, 56 crores, and Ferrero Products, 23 crore rupees. Over the past 5 years, the company's net profit has grown at a 29% CAGR till FY25. Much of this growth can be attributed to Marlboro's success, particularly in Western India, where it has overtaken rivals to become the leading brand in cities like Mumbai and Pune. Godfrey Phillips has also made aggressive pushes into South India, ITC's traditional stronghold, and is now eyeing the East for expansion. But not all is rosy behind the scenes. Despite the profit growth in FY25, the company's operating cash flow tells a very different story. Cash generated from operations dropped sharply by 63% in FY25. The culprit? Trade receivables. payments yet to be received by the company shot up from 72 crore rupees to 453 crore rupees, a 528% spike, indicating delayed collections that could trigger liquidity pressures or increase the need for short-term borrowing. Even more concerning is how the company deploys its cash. Cigarettes are a cash cow. Over the last decade, Godfrey Phillips generated 5,235 crore rupees in operating cash, but reinvested only 554 crore rupees into fixed assets. Instead, it has built up a massive portfolio of financial investments worth over 3,018 crore rupees. These investments, mostly in equities and mutual funds, make up 76% of its non-current assets as of FY25. That's a big bet on markets rather than on the core business. Then comes the corporate governance cloud. As of March 2025, the KK Modi family owns 47.4% of Godfrey Phillips, with Phillips Morris holding another 25.1%. The infighting within the family, especially after KK Modi's death in 2019, has taken center stage. Samir Modi, once on the board, was ousted in August 2024 amid the ongoing dispute. His sister Charu Modi remains an executive director, while Lalit Modi, infamous for his IPL tenure, has taken a back seat but supports monetizing the group's assets. At the heart of the feud is the strategic direction. Samir Modi had built 24/7 retail business, arguing that it was a much-needed diversification play akin to ITC's pivot beyond cigarettes. Lalit Modi favors liquidation. Bina Modi, however, insists on staying true to the core tobacco business. She oversaw the sales of 24/7 despite Samir's objections and has made no major moves towards fresh diversification. At the company's 87th AGM, over 96% of public institutional shareholders voted against Bina Modi's reappointment as managing director. But thanks to the promoter group's control, the resolution passed. The truth is, diversification has never really worked for Godfrey Phillips. The company exited the tea business in 2018, sold off the Pan Vilas chewing tobacco brand in 2022, and has spent over 800 crores on failed experiments between 2001 and 2024. Contrast this with ITC, which has successfully brought down its cigarette revenue share from 74% in FY05 to 40% today, excluding hotels. And finally, there's regulatory risks. Cigarettes remain one of the most heavily taxed products in India. Taxes currently form 53% of the retail price. The WHO recommends that this be at 75%, leaving the door open for further hikes. Any increase could put a dent in margins and stall volume growth. Despite all these risks, the market remains bullish. Godfrey Phillips trades at a steep 37.4 times PE, almost double its long-term median of 20.3 times. Investors are clearly pricing in sustained earnings growth and further the Marlboro-led expansion. Close competitor ITC trades at 26.5 times. But if growth falters or if the legal quarrel spills into business disruption, that premium valuation may quickly deflate. So, where does Godfrey Phillips go from here? On the one hand, it boasts of a powerful brand, rising volumes, and unmatched pricing power. On the other hand, it's weighed down by succession drama, poor capital allocation, and a stubborn dependence on cigarettes. As Modi versus Modi plays out in real time, the outcome may shape not just the company's leadership, but also its strategy, shareholder returns, and its very identity. Will the Marlboro momentum continue? Can the company find a new growth engine beyond tobacco? Or will governance and regulatory risk catch up? Let us know what you think in the comments section below. For more such insights, subscribe to Bottom Line by Groww.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.